Ladies and gentlemen, welcome to Creating Tailwinds podcast by FlightPath Financial with your hosts, John Urbick and Jared Adams. Join us today as we discuss the power of infinite banking. And here we go.
Good morning, Jared.
How are you today? Looks like you're in a beautiful, beautiful tropical spot.
You know, you set the tone, and I said, you know what? I'm going to the beach today. We can. It's all about how you think, isn't it?
All about how you think. You have to rethink your thinking. So why not rethink your thinking at the beach?
And I would rather be looking at a beach and the wind blowing the palm trees behind me than a blurred image of some of my pictures on the wall. So that's where I'm at today.
I love
That's
it.
where my mind is at.
I love it. That's fantastic. Well, I know we started a little earlier today, but hopefully, shortly after noon, you've got a nice solid drink with a little umbrella in that drink here today.
Well, it's coffee. It's not a pina colada or anything. This is coffee because it is still earlier.
I get it. I get it. That's awesome. Any update on you guys? How's everything going on your end?
Everything's doing great. We had an awesome trip. I got invited to participate in a 38th reunion of my undergraduate pilot training class from down in Texas, Reese Air Force Base, which is no longer. And oh my gosh, it was like stepping back in time, 38 years ago, and we just picked up where we left off. It was so much fun. It was a great time. Those guys are tearing it up, and one gal in the class. Everybody's doing wonderfully, and I was amazed at the turnout. Gosh, it was a lot of fun. And hear all the backstories too, all the stuff that was going on that you didn't know about, that you thought you knew.
Oh yeah, I
can rethink your thinking.
I can only imagine. I had a good friend recently that was telling me some stories about where some specific call signs came from. And oh my goodness, so many different stories that come out of just one person. I mean, and there's hundreds of thousands of those out there. Like, there's not just a unique one. And the ones that he were telling were just cracking me up. I couldn't believe, how funny and in-depth some of these call signs can get. Again, the behind-the-scenes stuff that you weren't in the room to know, yet you get to kind of hear the story afterwards.
Yeah. Well, I'll have to share mine with you at another time off camera.
Sure.
It's not bad. It's funny, and it's a long story. I don't want to
That's right. I get it. I love it. Well, I think last pod we finished with the idea that we would pick right back up where we left off on this concept of self-insuring, and really, just maybe to lay some of the groundwork on that. What we're talking about is if when you purchase an infinite banking concepts style policy, a life insurance policy, you are buying into a whole life policy, a dividend paying whole life policy with a mutually owned company. And by doing so, you are transferring risk of your life to them. So what you're saying is, I know someday death is inevitable, whether it's one day, 100 days, 1,000 days, or 100 years, you know that at some point there will be a death benefit, and that's what you're purchasing into, correct? You're purchasing into, you're sharing the risk via a cost, so that whenever that does happen, there is a payout that goes with it to, you can't compensate for your life, but to pass on to the people who you would like to choose where that goes in the future. So again, just as a groundwork, okay, so far I've said that correctly?
Yeah, no, and there's a giant you're dead on, but no pun intended. There's a spectrum. There's a large spectrum where people say, I could care less about the death benefit. I'm not doing this for the death benefit. And I've got plenty of clients who say that. Yep. It's all about the banking function, and we're using the life insurance contract as the chassis for our economic model to run our own lives and make our own choices and build freedom that we don't currently have because somebody else controls our money.
That's right.
But everyone is different, though. You're absolutely. Some people like a blend of both, for sure.
Sure. Yeah. So you're not only capturing the banking function in your life, so that there's a living benefit of it, but we just talked about the afterwards benefit of it as well. And I've even had folks say, I could care less about the death benefit. I don't have any kids. I don't have any spouses. I don't have anything. Okay, cool. Well, Are you not involved in your local church? Is there not some local charity that you love? Is there not a local farm or business or someone? You've got to be plugged in somewhere.
Yeah.
There's always some place that you could pass along a very generous check to. Again, sometimes it's difficult for folks to see that, but it's not always,
Yeah.
kids and spouses and
You
otherwise.
and I think that way. We're in total agreement. We both share that kind of a vision. But I can tell you there are people out there that said, nope, nope, nope. I could
Yep.
care less about
Yep.
any of that.
Yep. I get
Fine.
that.
So if but we're here to serve everybody,
That's
and
right.
we're about infinite banking,
That's right.
and we can design it exactly as you wish. It's a very individual thing.
Thread the
So
needle. That's right. Yep.
exactly right. Exactly
So
right.
I guess I start off of that just to share where that risk share starts,
Right.
right? Is you've
Right.
already created a system of which you are sharing risk of your covered life. That's the absolute basic framework. If you talk to John and I, that's going to be your one of your first setups is once we get to know you, who you are, how we can help, that's going to be the first setup.
Sure. Of
So
course.
I use that as a launching point to say further down the road, maybe multiple months, maybe multiple years, then you can start thinking about what this looks like on the self-insurance side. And the reason why I say that is you you can't just launch out of the gate with a small amount of cash value in your account. That's something, remember, a reminder, the cash value is the current present value of your future death benefit, right? This isn't cash. This isn't dollars, but it's a cash value of which you have access to.
Right.
So through that, you have this is where the infinite options open up, right? Are you choosing
Sure.
it to finance a vehicle? Are you choosing it to finance a home, a boat, a vacation? All of those things, literally infinite options at your disposal that you get to pick, you're in control. However, if one of those options that you choose is to maybe carve out a small amount of that cash value for your own insurance. All right, now we start going down the path that we were talking about. And by insurance, I'm talking specifically maybe it's a car insurance, maybe it's a home insurance, maybe it's a boat insurance or health insurance. We all pay all of these health insurance premiums and all these various premiums that go out the door, again, as a form of shared risk. One of them protected a life, another one protects your health, your car, your home. It's just shared risk.
Right. And the thing about it is, we've talked about so many times, the last podcast, Rethink Your Thinking,
Yep.
takes us to today
Yep.
on risk management, self-insuring, and how does that look inside of how do you utilize an IBC contract or a
Yep.
structured contract to do that? And I'm telling you that as you know, I use this stuff all the time. Auto insurance. You can get a no deductible auto insurance, contract if you like from property and casualty company. But if you look at the cost structure on the deductible going from 0 to 2,000, it's a lot.
Yeah.
You can
Yep.
save hundreds of dollars, potentially, depending on the car, you have thousands of dollars on your auto insurance just by self-insuring. And you always got a deductible, right? And
And
then there's
just
the
sorry for a
go
quick
ahead.
interruption, just to break you down there, even the difference there between self-insuring the deductible versus self-insuring the entire vehicle,
Sure.
right? Two very different things, right? You may build up your deductible to $2,000 or $3,000, and now in the unfortunate event that you total your car, all you have to finance is that 3,000 to cover the deductible, and now the insurance covers the rest. So
Right.
there's
But
that
there's two
balance.
sides of the equation too. There's also the liability where you're covering
Right.
somebody else.
Exactly.
So
I wanted to make sure we hit that.
yeah, I mean, you can drive that number way up. You don't want to be completely uninsured in that respect, because say
Exactly.
you have an at-fault accident
Yep.
or an uninsured motorist, and that other person could turn around and sue you, and they're actually going after the insurance company because that's where the money is.
Sure.
But now you're on the hook for that,
Yes.
and that could be a very, very costly
Exactly.
occurrence. So
So
you
well
have to
said.
protect that downside risk,
That's
and
right.
that's what we're talking about. But the other one is on the collision, the stuff on my cars.
Yep.
If I used to do this all the time, Jared, cars were paid for, they were airport cars, they're only worth about 5 grand. I'm going to self-insure that. I'm not even going to cover it. If I total it, I total it. Whereas the liability, it doesn't matter if I'm driving a $5,000 car or a $100,000 car. That liability has to be in place to protect yourself. There's a big
Perfect.
difference there,
I'm
right?
so glad that didn't get glazed over because that is a really, really important part. I know we talk about the
Yeah,
protecting the vehicle on a self-insurance point or protecting, the asset that you have, but there is so many more other protections that can
yeah.
go south fast. So we're not saying ignore those and just have this available.
Yeah, and just to be clear, we're not in the property and casualty business. We're not licensed in property and casualty, but
That's fair.
I grew up in that space. My brother ran a large company. It was all he did was property and casualty, so I was intimately familiar with it.
Yeah.
And over the years, owning all the cars we have in the family, you become very fluid in this language.
Yep.
But moving on from auto, you look at your home. I just went through a experience.
Yep.
Uh,
Yep.
I saved a bunch of money. I've learned about this company somebody introduced me to called Lemonade. Caution. You can get pretty inexpensive homeowners insurance through this company, but one thing you got to be aware of is they put a lot of the onus of what they normally do on you, and it's all digital, it's all online, and I had an experience where when I when I got the insurance, they had me go around and take all these pictures of the house, and some companies do that now, but I had never done that before. Where I was the guy taking the pictures and walk through the house. Fine, I'll do all that. Sent them like dozens of pictures, and well and good. Well, unbeknownst to me, they followed up on the renewal date and they said we want an update in pictures. Well, they sent me an email. It went to my junk mail. I never saw it. My mother-in-law passed away during this time. My brother went in for open heart surgery. Life gets busy. And then they sent me 2 weeks later another notification said, look, if you don't send this to us, we're going to cancel you. And they did. And how did I find out? From the mortgage company. They kept called me up and said, hey, you've dropped your homeowners insurance. You've been canceled.
Oh yeah.
What's up here?
Yep.
I'm like, huh? I don't know about this. So as I
All of the
investigate,
correspondence were coming through email, so you had no
yeah,
clue. Yeah.
no idea.
Sure.
Lemonade did not notify me. They did not notify the brokerage house that I bought it through. Nothing. So I called them up. I said, well, this is a simple misunderstanding. After talking to multiple supervisors, they said, sorry, policy, we're not going to renew it. Okay, fine. I'll go ask the next insurance company. Went to the next insurance company, and this is something that I learned that I want to pass on. If you're uninsured at all, even for a day, it's very, very difficult to get replacement coverage.
Sure.
So I wound up going to USAA, who, when I was looking at this, oh, they're a little more expensive, so I'll use this other one. Bad idea. You get what you pay for. USAA is an awesome company. They stepped into the breach for me and they gave me the coverage. And not only that, when I asked the question about self-insuring from my coverages, I said, "Hey, can I jack up the self-insurance portion of this?" They said, "Of course you can. They'll go up to 5% of the value of the insured property." Now that's a lot of money.
Yep.
However, I have an IBC contract and those funds are already there.
Sure.
So looking at my whole history of home ownership, I would have saved a ton of money just by self-insuring that component.
Yes.
That is risk mitigation strategy and
Yes.
balancing the risk.
That's right.
So it's out there for everybody. But anyway, just a side story.
No, I love
But
that. That's a perfect
know
example.
what you're buying.
Yeah.
Know what the rules of engagement are
Perfect
because
example.
it can get dicey.
Yep. Literally. I mean, so well said, and it's such a perfect explanation of how difficult it can be when you find yourself in that scenario of
Who knew?
uninsured, unintentionally uninsured in your case, and how difficult it was for another company to chat with you about it. And then here you go, luckily found out someone that would work with you, and not only work with you, but increase the deductible to a point that you're comfortable with. So
Yeah,
you're now probably paying less than even you were before for the Lemonade insurance.
way less.
And, again, tragedy happens. We don't plan on these things happening,
Yeah,
but when something bad happens, you have the funds in your cash value portion of your life insurance contract that you can easily cover that deductible. And then once that deductible is covered, you're going to pay yourself back in that gain of premiums
that's right.
over the course of you pick the term. So I guess maybe just a quick rundown, a quick side path on that, on the logistics part of it is, the last episode we did, we were talking about the human behavior piece.
Yeah.
The human behavior piece on this cannot be passed over as well in terms of, you know, if you're saving $1,000 a month in insurance, that's not $1,000 a month to go buy another car.
Right.
That's $1,000 a month that you still need to be ensuring you are paying yourself in preparation for your, for your, uh, whether it's a future car insurance need or whether it's, there's two quick ways or two words that follow along. I'm stealing this one from Jason Lowe. There's two answers to your financial freedom. It's two words: pay premium, right? So don't forget that $1,000 a month that you now saved. Make sure it's going towards first base, then PUAs, then loans, and if not, now you can start to if you're building your money now in someone else's
Yes.
bank, you can talk about what that looks like to see maybe you can expand your policy. Maybe you're just getting ready for the next year's annual payment. In either way, all of those three are carving you into a spot where you have the financial freedom. You are the one in control. So that when you now have to make that payout for that $5,000 deductible, it comes out and now you carve out portion for the policy loans that you had extra for because you had been saving appropriately, right? So it all funnels back to the how you think. If you're not thinking about this with a savings mentality and with a living within your means mentality, you're gonna get caught behind the eight ball. And so it's really, really important that that doesn't get glazed over.
No, 100%. Think of it as a pay raise. If anywhere you can save money by self-insuring, if it's an extra couple $100, if it's 1,000, if it's several thousand, it's a pay raise. Don't spend your pay raise.
That's right.
Engage that pay raise and build up that warehouse of wealth inside your contract, your infinite banking concept structured life dividend paying life insurance contract,
Yep.
and let $1 take on many jobs. We
Sure.
don't have to allocate new dollars all over the place. Here's an envelope here, here's an envelope there, all over the place. You got envelopes for different contingencies. This
That's
is
right.
all in one bucket
That's right.
because probability is you're not going to have a catastrophic events across all fronts that you're self-insuring. But if you do, you should have the wherewithal to absorb that. And if you don't, then don't self-insure that.
That's right.
When I bought my first house, the last thing I would have done was self-insure 5% of the value of the house. I couldn't do that.
Sure.
Wife and kids, I couldn't do that. I can now.
Yep.
And everyone's circumstance is different, and you have to look at it. But I'm a big believer in self-insurance and taking on the liability for myself
Yep.
because I benefit financially from that.
That's right.
And anybody out there can as well.
That's
I
right.
mean, you can move on to a car rental. You go rent a car. One of the silliest things people do is they go and they get car rental insurance from the insurance company that is backing that agency, that car rental agency.
Yep.
When your own policy, check it. Your own policy will cover your car rentals so long as it meets certain categories. You got to look into this stuff and verify it. Don't take my word for it. Make sure you verify it. Credit cards, certain credit cards, the
Credit
Amex and
cards.
the Sapphire, they'll cover that stuff. But know what the rules of engagement are, right? So if you do that, there's still a deductible in there that must be met. On mine, it's significant because I do it. That's self-insured. That's $1 doing many jobs.
Yep.
So we can apply this concept in our lives. Any place you touch money, any place you have to insure or pay for insurance, different insurance or coverages,
Yep.
can I self-insure for that? And if I
Yep.
can, how much? And how much is reasonable?
And I love your description of, envelopes, right? A lot of folks use different methods for budgeting, and you got envelope here, envelope there, envelope here. You're saying this is all funneling into one big envelope.
Yeah.
You
Yeah.
know, for me and in my personal experience, we ended up converting a lot of our savings that was in cash, that was an emergency savings. We converted that into when we started our infinite banking concepts journey. And so we converted a good portion of that into the policy, right? So now I don't have money that's inside an envelope that's inside the policy, right? But I kind of do in my own mind, right?
You
There's a
do.
number in there that is a protection for my family. God forbid the worst happens when there's zero income coming in for whatever reason. We're protected for, 10 to 12 months through that access. So I won't even dip into earmarking those funds
Right.
in terms of a self-insurance or buying a vehicle or an investment. I won't even think about going beyond that baseline because that's the protection for my family. Now
Yeah.
that's not how you have to do it. This is why this is why we want to get to know you. We want to get to know what your struggles are, what you're going through, because in Jared's mind, that works. That's understood. That's easy. He gets it. That's how it works. But that's not everybody else's mind. And these
Yeah.
are not all just a little copy paste. Good luck. Here you go for the rest of your life. There's an education and there's a really important part of what your involvement is in this. You are creating your own financial system. And so you need to know what that looks like and be confident in what you've built and how to
Right.
access it and how not to over over tap yourself or get in a spot where now you've taken on the risk that the insurance company had taken part of. Now
Yeah.
you're taking on so much, right? The whole
Right.
thing we started out at the beginning of was whose risk is this? Where does that pot of risk sit?
Yeah. No, well said. Well said. And risk carries over into all aspects of our lives. I mean, we just talked about the car rental thing. How about health insurance? Health
Sure,
insurance is a huge one for everybody, right? I
sure,
mean, that's a big part of budgets. And whether you decide if you're self-employed, if you're working for an employer, there's these high deductible accounts.
sure.
There's these various gold and platinum and bronze and all the different
Yep.
things.
Various HSA accounts. Yep. That's
Exactly.
right.
And so I love those things because I like to self-insure.
Yep.
But look, for people should look at they can max fund out their HSA, which is great. If it's I think for 2025, I have to double check my numbers. I think for 2025 it was 4,300, and for a family you can put an 8,550
Sure.
away for 2025.
Yep.
But that's it. I don't know about you, but I've blown through those numbers in given years because I
Oh yeah.
mean one ER visit and those
Oh yes.
numbers are taken out. And then you
100%.
look at, oh my gosh, you look at the insurance companies, they've got many different ways of categorizing expenses, and it's deliberately confusing. Co-pays, co-insurance, deductibles.
I
Your
know.
head spins with
Yeah.
all the things.
I was going to sorry, I was going to add one quick point there on the HSA account you were talking about that
Yeah.
8550 for a family.
Yep.
The other important part to know with all of those confusing words that they're throwing out on what's is what and coverage here and coverage there, the one that I really like to focus on is the max out of pocket.
Yeah.
Because
For
even though
sure.
I know I've got to hit the deductible before they're going to start chipping anything in, if I can cover the max out of pocket in my HSA account, of which funds have gone into that tax free. Okay,
Yep.
cool. Like that.
Yep.
If I can cover that max out of pocket for 2 or maybe 3 years, I
Hmm.
know that I'm in a pretty good spot on the self-insurance side right now. That just doesn't happen overnight because I guarantee
No,
you your
it
max out
takes
of
time.
pocket is not 8550. I mean,
Right.
unless you have some
Right.
stellar company taking care of that. So,
Right.
maybe just a small side on a different way of thinking about that is that if you've covered up to the max out of pocket for multiple years, you're in a spot where you can consider this on the self-insurance side, and that's just
Right.
covering the out-of-pocket costs, so now you don't have to dip into maybe a life insurance contract, maybe savings, maybe borrowing, whatever that looks like. You've covered that through the HSA.
Well, one of the techniques that I use that I really like with that HSA, and I max fund that thing.
Yep.
However, when I do have a medical expense that's eligible, I put it in there. But instead of just burning through those dollars, it's now perfectly legal for me to pull that money out for medical expenses. What I'm doing is I'm paying medical expenses out of current income. Then
Yep.
I'm taking that money and I'm dumping it into my contract. So if I take $1,000 out for medical expenses for HSA, I put $1,000 into my life insurance contract. And so
Okay.
thereby it is a completely tax-free transfer for
Yep.
anything I need now.
That's right.
Because it went in tax-free, it came out tax-free, it goes into my contract tax-free
That's right.
essentially, and it grows tax free. There's very little in this world that I know that can do that.
That's
So
correct.
that is a outstanding mechanism to use to fund a life insurance contract. And you want to put the money in the HSA, but the big deal is if you take it out, put it in. Don't
That's right.
just say because if you're going to do that, you're kind of defeating the purpose of it. It
Correct.
helps because it's tax free, pays medical expenses. I get it,
Yep.
but try be disciplined to put that money into your contract, thereby creating a growing pot of
Growing your
money.
warehouse of wealth.
Yeah,
Yep.
absolutely.
That's right.
And it works like a champ.
Yep.
So when you look at I was looking at the top three medical expenses. That's one of the things I was looking at. Heart conditions, traffic injuries, cancer, and then the fourth was mental disorders. All right, those are the four top things according to Mayo right now that they're looking
Sure.
at.
Sure.
And what can we do about that? Even apart from IBC, your lifestyle means that you got to exercise, you got to eat right, you got to reduce the stress. Stress is a huge one. And stress, interestingly, is one of the top contributors for the chronic stress, financial problems. What are we
Mhm.
doing here?
Right.
Infinite banking takes financial problems head on.
That's right.
We create by creating the bank. You're flying airplanes. We've talked about this before. People, or even in a car, maybe people can identify this more. If they're in the backseat of the car, they tend to get nauseous. But if they're driving the car, they don't. Why? Because
Yeah.
they feel in
In
control.
control. Same
This
thing
is
in the
what's
back of the
happening.
airplane, like you're saying.
Yeah,
That's right.
yeah,
And
yeah.
we're even referring to, the whole being in front of the airplane and creating your own tailwind. We want
Bingo.
to allow that aircraft to get to the destination faster because we're controlling the environment.
Exactly right.
Yep. Well
Exactly
said.
right.
Well said.
Apply this across the board, whether it's your medical, backup, your backstop, you buy a boat, you buy an airplane. We got friends who are out there doing that. Any toys, you can do this
Yep.
with this contract.
That's right.
It's phenomenal. It
Yep.
is absolutely phenomenal, and you build in the flexibility to do it. I had one client that was so excited about this, they were going to dump in a ton of money into it
Yep.
because they had a inflow of capital.
Yep.
Well, that's wonderful, but there are some restrictions that you and I have to deal with when we build these things. And I said, do you want to make that contribution every year? Oh, no, just this year. That's a different animal,
It is a
right? It's
different animal.
on how you
That's right.
construct it.
Yep.
So it's very, very important to get somebody who's not very knowledgeable about this stuff, like Jared or myself or another infinite banking practitioner, because oh, but man, you can do it. You can take a chunk of money and you can put it in, and it's
Sure.
going to look awesome. You think, hey, I got this contract built and I'm up and running. Well, guess what? Mech is just down the road, modified endowment contract, and
He
you do
can
not want
introduce you to
that.
Mac. Well, and the reason why that part doesn't fit into someone, so a strategy we would use is that they've forgot one of the first rules was that think long term. This is not just a one shot done,
Yes.
buy a product and then you're done for the rest of your life. No,
Yeah.
this is a process of which we would be honored to help you understand more about. It's not out there that much. That's why we're doing this podcast.
Yeah.
It doesn't make it out to the
Great.
masses. It gets stymied by a lot of different products and a lot of different processes and people that just, to be honest with you, they make a lot of money by not having you in control.
Yeah.
So we've already
True,
talked
true
about that.
statement.
I'll save that for another time. Yet the reality is
Well,
what it is.
well, at the end of the day, your IBC structured dividend whole life insurance contract lets you do many jobs with the same dollar. It is the most powerful, most useful, most utilitarian use of your capital that I can think of.
Yep.
And we would love to talk with you, right, Jared? I mean,
Yep.
we'd love to talk with anybody out there. You
Sure.
know, you
And
can go online, go to the website, you can set up a 30-minute free consult with Jared or myself. It doesn't cost anything. There's never an obligation, and we'll be happy to talk with you anytime.
yep. And just some additional clarity on that, right? That we can't have multiple uses of $1, right? Yet what the job that it provides by going into this or the flexibility that you create, right? You're putting $1 into a whole life dividend paying insurance policy, and then you have these literally infinite options of what you can do with it. So the only limit is your personal thinking. You've
That's
got
right.
a dollar going in for a product that you're purchasing. However, if you understand the process, the
Right.
options are limited. I was unlimited.
That's right. I 100% agree 100%.
Yep.
Well, this is a nice carryover from our last podcast where
Yes, agreed.
rethink your thinking, and then
Yep.
this one carries into our management of our money. And risk mitigation strategies
Yep.
and thinking about the deductibles that we're paying out there and how we can fund that differently
That's right.
and save ourselves a ton of money. This is just one application of the infinite banking concepts process. And it is, as you said many times, it's a process. It's not a product.
That's right.
And we would love to share it with you. So
Love it.
that's all I got, Jared. Have you got any more to add on those
Nope.
items?
Spot on. Great
All right.
spot to finish. We'll pick up next time for another episode.
All right. Well, look, great seeing you this morning. I love the backdrop. And I will see you at the beach. I'll have the catamaran up and running, and we'll go out sailing. How's that?
I expect you to be way more tan than when I next see you.
Oh, okay. We'll throw Antoinette in here. She's got the Italian blood. They brown up very nicely. Baltic. What can I tell you? All right, Jared. You have a wonderful day. Enjoy it, and we'll talk with you soon. Look forward to the next podcast.
Have a great day, John. Talk to you soon.
You too, Jared. Thanks.
We'd like to thank you for tuning in to today's episode of Creating Tailwinds podcast with your hosts, John and Jared. As always, we welcome your questions and critiques. You can reach us through the Contact Us tab at flightpathfinancial.com. Remember, it's all about how you think. As Nelson Nash has said about infinite banking, give it your close attention, and it can make a radical improvement in your financial future.